Welcome back to Investing Talk Podcast. Today we're focusing on Ouster. You pulled together some really interesting information on this LiDAR tech company, and our aim here is to unpack what's most important for listeners right now. We have news updates, a due diligence report, stock analysis, quite a good stack of sources for us to work through.
Absolutely. And the main questions I think are pretty clear. What's really going on with Ouster's performance lately? What about their future? And, how do they actually stack up in this very competitive LiDAR industry? Plus, the big one.
Right.
What should someone trying to get up to speed quickly really take away from all this?
Okay, let's start with the recent news. This is as of April 20th, 2025. This says May 8th is a key date. That's when Ouster plans to release their Q1 2025 financials. That's after market close. And then there's a conference call scheduled for 5 p.m. Eastern Time. Seems like something to definitely keep an eye on.
It really is. And this Q1 report follows what looked like a very strong period before. Back in March, they announced record revenue for Q4 and also for the full fiscal year 2024. So you could say there's some positive momentum building into this upcoming announcement.
Interesting. So record revenue reported, upcoming earnings, but the sources say the market hasn't really reacted much yet. Limited impact on stock price and volume recently.
That's pretty normal, actually. Often happens before earnings. I think investors tend to hold back, wait for the actual numbers, wait to hear management's tone on the call before making big moves. But the analyst sentiment is described as, cautiously optimistic, based on that prior revenue and just the general potential in the LiDAR market. So there's some underlying positive feeling there.
Understood. Okay, let's pivot a bit to Ouster's actual business. What they do, how they fit in the industry. For anyone maybe less familiar, LiDAR. It's that sensing technology, right? Used in cars, robotics, industrial stuff, even smart infrastructure.
Precisely. Yeah, the LiDAR sector is definitely expanding. Autonomous vehicles are a huge driver, obviously, but also these smart city, smart infrastructure projects. And when you look at competitors, names like Velodyne LiDAR, Luminar technologies often come up. The big trends across the board are, innovation, better performance, and bringing those costs down. That's crucial.
So how does Ouster try to stand out? What's their angle, especially compared to someone like Luminar?
Well, Ouster's approach seems to hinge on offering high-resolution LiDAR, but importantly, at a more affordable price point. That's kind of their niche. They have patented designs, specifically around their digital LiDAR architecture. It's meant to be simpler, fewer parts.
Which leads to lower manufacturing costs.
That's the idea. Lower costs compared to maybe more traditional mechanical LiDAR setups. This potentially gives them an edge, not just in automotive, but maybe even more so in industrial or robotics, where cost can be really sensitive. The report describes them as a challenger moving towards leader status, so they're gaining ground, it seems, through tech and partnerships.
And it sounds like broader market trends are working in their favor too. You mentioned autonomous vehicles, but also industrial automation, robotics.
Oh, absolutely. The need for better sensors, better eyes for machines is just growing everywhere. Transportation, factories, logistics. But, there are risks too. You've got potential regulatory hurdles for autonomous tech. And the technology itself moves so fast, they have to constantly invest in R&D just to keep up, let alone stay ahead. It's a demanding field.
Let's look at the financials then. The sources give us some numbers as of April 2025. Record revenue mentioned $30 for the full fiscal year ending early 25, and a recent quarterly figure around $28.08. That does point towards pretty strong top-line growth over the last few years, doesn't it?
It does, yeah. That kind of growth is what you'd expect or hope for in this phase. But then you look at earnings per share, the EPS. Trailing 12 months is negative $2.10, so still losing money on the bottom line, which, again, isn't unusual for tech hardware companies focused heavily on growth and R&D investment.
Right, they're spending to scale.
Exactly. The positive sign is the expectation for improvement next year. The forecast suggests moving from negative $2.20 to negative $1.17 OPS, so narrowing those losses.
Okay, so profitability isn't there yet, which explains why a PD ratio isn't applicable right now. What about other financial health metrics? Things like debt to equity, free cash flow. Did the sources mention those? I know they're important for understanding risk.
They are important, definitely, but the specific figures for debt to equity, FCF, price to book, ROE, those weren't explicitly laid out in the materials we looked at. As the summary notes for that level of detail, you typically need to go to their official SEC filings, the 10Ks, the 10Qs on their investor relations site.
Right. Standard practice for deeper financial digging. Okay. Now, management and governance. The CEO seems focused on international scaling, global offices, That sounds positive for growth ambitions, but there was that note about the CFO departing back in January 2025. That usually raises an eyebrow, doesn't it?
It can, yes. A CFO leaving, especially without a successor immediately announced or a very clear reason given, is often seen as a potential red flag. It could signal internal disagreements, strategic shifts, or maybe financial pressures. It's something investors would definitely want to watch. Needs more context, really.
Okay, so let's try to balance things. Strengths and these potential red flags. On the plus side, the sources highlight accelerating adoption of their Gemini platform. That's their newer sensor tech, right?
Yes, higher performance generation.
And also their Blue City software, which is for the smart traffic systems. That seems like a tangible win. Add in the record revenues we talked about and improving margins, that suggests they may be getting more efficient.
Those are definitely strong points. Seeing the tech adopted, like in Blue City, shows market validation. And improving margins alongside revenue growth is a good sign, suggests scaling might be working, operational leverage kicking in, perhaps.
But that CFO departure lingers as a question mark.
It does. It's one of those things that just requires monitoring. You look for clues in the upcoming earnings call, future announcements.
How's the market feeling about Ouster overall, sentiment-wise? Recent news sounds positive, emphasizing the tech leadership. And there was that specific mention of analysts viewing Ouster more favorably compared to Luminar recently.
That comparison is interesting. The narrative seems to be Ouster showing faster growth, really pushing their digital solid-state LiDAR approach, which, being solid-state means no major moving parts, potentially more robust, cheaper to make at scale.
Oh, okay.
While Luminar, according to these sources anyway, might be facing some challenges or slower growth. And apparently there's also growing chatter about Ouster on social media leading up to earnings. A bit of buzz building.
So, looking ahead, that May 8th earnings report is obviously the big near-term catalyst. Beyond that, what are the key things to watch? Risks and opportunities.
Well, the ongoing risks are still there. Regulation, as we mentioned, and just the sheer intensity of competition. They need to keep that R&D engine firing. On the opportunity side, continued adoption, potential big contract wins. And it's worth noting some analysts have put out price targets. One mentioned was around $27. That implies quite a bit of potential upside from current levels if they hit their marks.
Okay, let's try to wrap this up for our listeners. Pulling it all together, Ouster looks like a company with significant growth momentum in a really hot market LiDAR. Their technology and maybe their cost-effectiveness seem to be key drivers. That May 8th earnings report is going to be really crucial. It'll either reinforce this growth story or maybe raise some new questions, and we should get more financial detail then.
Absolutely. We've seen the positive signs, especially the record revenues creating optimism. But, you balance that against things like the CFO departure and just the inherent risks in such a fast-moving tech sector. So keeping a watchful eye makes sense.
And this whole exercise really highlights how important it is to stay updated on those financial releases, but also to understand where a company sits competitively within its industry. For the really deep financial data, remember Ouster's investor relations website is the place for official filings.
We hope this discussion has given you a clearer picture of Ouster right now and the key things to consider. What really stood out to you from all this information? Does it spark any other questions for you about LiDAR or maybe Ouster's path forward?
Let us know your thoughts in the comments below. And if you found this analysis useful, please do subscribe, like, and perhaps comment on this conversation. It really helps us out. Thanks for tuning in to Investing Talk Podcast.